Dear viewers, welcome to this episode of Expert Speaks. This week we have dedicated for learning something new in the marketplace, and we have called a very eminent guest speaker. The topic that I have picked up for today is Contra Investing. It's a very interesting field of or a method of investing. If somebody follows it, there is a lot of benefits to reap from this. So to understand this, we have called a guest speaker today. Stay till the end of the video. Interesting points we are going to discuss through and through this video. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the interesting concepts of contra investing, I have invited for this particular show today my eminent guest speaker, Miss Harini Dedia. She is very popular guest speaker on our channel. For those of you who are watching my channel for the first time, a brief introduction of Harini Dedia for you here. She started her career from New York working for a hedge fund, and currently she is working as Head of Research and Fund Manager at Tamohara Investment Managers. She comes on our channel very regularly. Every quarter, she takes us through what's happening in the market, the opportunities and threats she observes in the Indian and the global markets. Welcome to this episode, Harini Dedia.
Thank you so much, Dr. Bhatt, for that very kind introduction and for choosing actually a very interesting topic. In markets that are trending and are in momentum, I think the topic itself is also very contra by nature. Thank you so much.
Very right, Harini. We need to do things to take away the attention of momentum seekers. Somewhere we have to speak about where they can make money other than the momentum. And it makes absolute sense if somebody is able to master some of these fine arts of investing. They can become the good long-term investors with that knack of making money in a contrarian way. To get started, my first question to you is, what's contrarian investing in the first place?
Contrarian investing would be any investing where you're betting against market trends, right? So anything that's prevalent in the market, you place a bet against that, or you place a bet on something that's not prevalent at all. In either way, it would be contra investing. Now, in my opinion, all large long-term investing, and by long-term, I mean really long-term investing, would be contrarian by nature, right? Because for you to make, if you're allocating large sums of money, you will want to find things before others find it. So that by nature has to be that you're betting on something that the other crowd has not spotted. And anybody who manages large sums of money, by nature would have to become a contrarian investor. It would be very difficult for them to not be a contrarian investor and still make a great long-term return on their investing.
From the words of yours, it looks like contrarian investing is interesting, and that's where the real money is to be made. But in the world of momentum chasing, contra investing is not that popular. Why is this?
Well, if it became popular, it won't be contra investing anymore, would it then? I think by nature, it would be something that would always remain relegated to a small segment of investors. And I think it is because it requires a fair bit of patience, a fair bit of thick skin on part of the investors. You have to be willing to look foolish in the short term to make those great long-term returns. And that's not everybody's cup of tea. Most of us will end up, doubting ourselves, wondering if this is the right bet or not. Price is sort of a addictive drug in our business, right? Because every day you get a report card, and if the report card is not in your favor, you're almost tempted to change your methods. So I think contra investing, I mean, if it was popular, it would not be contra. And I think it's difficult to practice, and that's why it remains a very interesting way of making money.
Apart from making money in the investing activity, people want endorsement. People want to see what my friend is doing, what the world is doing, what television is talking about.
Right.
Contra is something which will not be discussed. And so you don't have an endorsement. So as you said, as you put the right word, you may look foolish. When the whole world is doing something else, you are doing entirely against it. You are swimming against the current. You are going against the common opinion of the herd, which is there in the marketplace. While I and you know this contrarian is a very interesting concept to make money. Can you remember any popular names or ace investors who have mastered this art and grown to riches?
Absolutely. Mr. Buffett and Mr. Munger would be the most prime, however cliche examples of contrarian investing. So there's a very famous quote that they have: be fearful when others are greedy, and be greedy when others are fearful. And that is, in a sense, telling you what contrarian investing is. So when the crowd is behaving in a certain way, you choose to behave in another way. And I don't think there's ever been a more successful investor than Mr. Buffett, right? He's become a person with wealth of almost $100 billion just by being an investor, not by, starting a company of, that manufactures something, that provides a service in something else or something like that. He's just been an investor all his career, all his life, and he's made significant amount of wealth doing that. And there are examples of that he gives you on a regular basis, and he almost gets ridiculed every time he makes these big bets, right? So right now, for example, he's sitting on over $320 billion of cash. When markets are at an all-time high, momentum's really, the buzzword, and everybody feels that, markets only keep on going higher. He's taken a call to sit on a cash pile. So we don't know how this pans out, but so let's look at his track record, over the last 10 years. I think one of his most successful large bets has been Apple in 2016. Now, remember in 2016, Apple was probably at an adjusted price of about $25, $26. It is today at about 10 times that. But that's not the point. The point is that when he bought it, it was a stock that had given zero returns in 3 years. So that's a contrarian bet. It's a large, large company that had done nothing for 3 years. It was not on any investor's radar. It was trading at 11, 12 time earning. I mean, it was a ridiculously cheap price, right? To buy a company of that pedigree at. And of course, earnings have not gone 10x since 2016 to today. But the stock has, because, once people find out that, oh, maybe he was right, maybe his thesis is playing out, the prowess that he thought Apple has as a consumer company is very, very real. You saw a lot of people piling into the stock, and then the valuation metric that got ascribed to Apple just got re-rated from 11, 12 times to 20 times earnings. So when he took the bet, and it was peak, I think over $100 billion bet, right? So it's not a small bet that he's taken. It was definitely a contra call because it was a large company that had given zero returns for 3 years. The valuation suggests that everybody had sort of just forgotten about it. Mr. Jobs was no longer around. It was a new management. People had no clue what was happening. And he chose to believe in the brand and in the consumer franchise that the company has built, and got rewarded very handsomely for it.
See, in the investing world, there are two methods of investing. One, you invest with emotions, which means rational thoughts are out of your mind, and you chase the momentum and you try to be with the crowd. The other is you do it with common sense. When you apply the common sense, the only thing which gets into a proper frame is the contrarian investing. I still remember when you brought the names of Warren Buffett and Charlie Munger into the discussion. They say most of the times we don't do anything in our life. We sit, we go out for fishing, we just chit chat. And so you have so much of a free time and you make killer amount of money. So that means one thing they have practiced for sure is to take emotions out of their investing. So when it comes to question of picking stocks or zeroing on an opportunity, looks like they are cold-blooded and they have zero emotions when they are picking. So what the world is not seeing, they are able to see in this. Now, for our audience, let's say somebody wants to invest as per the contrarian technique. How can they identify the opportunities? Are there anything that you can say, look for one, two, three kind of points where they can identify the contrarian opportunities?
Contrarian opportunities are available across all levels, right? If you're a investor who has the ability to allocate across the world, you can take contra calls on different economies on different commodities, all of that. If you're investing at a broader level, you can take contra calls on sectoral basis. And then if you're a bottoms up stock picker, you can take contra calls on that basis as well. It really depends on what is the composition of your portfolio and what is your own style. And because in contra investing, especially, you're spending a lot of time with the company, right? You typically end up giving it a lot longer time horizon than your sort of momentum investing, where you just play as and when it's in favor and get out. I believe that you have to have a fundamental understanding of whether this business is great or not. A great business going through a bad time, sort of being memeified on, erstwhile Twitter, that's a great place to start. So if you see a company that you believe is really good, that a lot of people are making fun of on Twitter, I would think that that's a great place to start. One of the examples that I can share from my own personal investing journey would be Mahindra and Mahindra in 2020. Nobody wanted to talk about that. I think for the last 5, 6 years, it had been a losing story. Nobody, cared about Mahindra and Mahindra cars anymore. It had become a thing of the past, something that was only done and used in a few states in the country, and people had forgotten that it used to be a very good company. From 2002 to 2018, it was the best performing Nifty stock and completely driven by earnings. There was a 30% plus CAGR in earnings that had delivered the 30% plus CAGR in stock price, which is unheard of for a Nifty company to do a 16-year 30%, and that's like small cap, mid cap returns, right? Or even better than that. So when a company of that pedigree goes through a bad phase that everybody just writes it off, it's a great place to start. And then you have to obviously start understanding, are they doing corrective actions, right? So in case of Mahindra and Mahindra, if you just read their annual report from 2020, you would understand that it's a company that's so large in stature. For them to publicly admit that they have gone off the right path, but now they're going to take XYZ measures to get it back on the right path, told you that, this is a company that's going to now get its act together, because they've shown it in the past that if they know the problem, they can solve it. It was just a question of them acknowledging that they had a problem. So I would say that any idea, be it an economy, be it a country, whichever category you are comfortable investing in, if you see a credible person or a credible company or a credible economy getting made fun of on social media or on your popular dinner table circles and all of that, that's a good place to start and investigate. Hey, what's happening here? Are these guys really messing up, or have they realized that they're messing up and they're trying to change the narrative now, and that they're trying to do something better? And if the track record has been good in the past, and if they acknowledge their problems today, they pretty much generally always come out of the mess.
Now, these contrarian opportunities, what we talk about, is it stock specific, or you can identify these opportunities at a sector level? Okay, there is somebody who doesn't know how to pick up the stocks, but he can pick up the sectors. Or can you look at this for a global investor? Can I look at a contrarian opportunity at a country level? Now, we saw the China lying idle for such a long period of time. Suddenly, you see the Chinese markets moving up. Looks like a contrarian at a country level. So, can these be spotted at this larger universe of country sector, or we have to look only for the stock specific?
No, absolutely. Like China is a great example. I think a year back or even 6 months ago, China was a great contrarian call, and as a ancillary, I would even go ahead and say that maybe revival in Australia could have been a great contrarian call, because a lot of their economy relies on exports to China. So, these kind of things are available. And mind you, a year back or even 6 months back, everybody on Twitter was putting these comparison charts, especially in India, putting out this comparison charts between, look how much the Indian market has compounded and China has not done anything, and China's this and China's that. And at some point, this country has a history of executing. They have a history of, being very, very good administrators, that they would figure out how to solve their problems. And I'm not saying the problems are solved so far, but once they acknowledge, see, markets are forward discounting. So once they acknowledge the problems and somebody believes out there that they've acknowledged it, you will see a revival. So sitting today, if I were to crystal ball gaze and tell you that what are the sectoral contra opportunities. Maybe chemicals in India. I think after the 2021 hurrah, the stocks have been completely decimated and on an average down 40-50% from their highs. And I think it's probably time, especially with Trump's re-election and what that means for Chinese exports, for Indian chemical companies who compete with those Chinese exports, to see some sort of revival in fortunes. We have already seen prices for a lot of chemical companies for their products stabilize. So maybe that is a contra call that's out there. Another one would be building products. Everybody in India believes that paint companies are never to be touched again. And these, mind you, these were darlings of the market. So everybody agrees that they used to be great companies, right? So that was my first condition for finding a contra company. Something that has been a great company, has a track record of execution, and somehow has become memified or made a joke about saying that, oh, this is not going to ever be great again because of XYZ reasons. The person who runs it, who knew how to run it as a great company, he or she owns more than 50% of the company today. They'll figure out a way to deal with the cycle and come out stronger. So that's another sector, building products in general to look at as a sectoral contra call. Those would be my two sort of ideas right now on that front.
I recollect a lot of things that we did in the contra investing in the last 10, 15 years. One very, very successful contra investing was in the year 2008, 2009. When the markets have melted down, I was producing a radio series for All India Radio at that point of time. I was in Karnataka in Mangalore. The series was by name Hana Ulisi, Hana Balisi, which means save money and grow money, where I said that this is probably the best time that you should close your fixed deposits and buy the banks itself. The story is in the year 2009, the bank FD rate was 5.5% to 6%. No, it was just 5.5%. The bank stocks had a dividend yield of 11%. Dividend, unlike today, was tax-free. Right. The bank stocks were quoting at half the book value, right? So you can't get anything better than this. So when somebody asked me, the markets are so difficult, so we have kept money in the bank, I said, just get out of the bank, fix a deposit, go and buy the same bank. And it was a story across the banking sector. You don't have to choose a single bank, whether it's Canara Bank, Vijaya Bank, private bank, PSU bank. The story was same. And somebody asked me, how will I trust my money if I have to buy the bank stock? I said, look, if you are trusting a bank to keep the money and the bank lends the money and the ability of the bank to repay you depends on how the strong bank is, what prevents you from owning the bank? And I tried my hand myself. So I liquidated all my fixed deposit at that point of time. I had exited the markets at 18,000 on the way up and kept my money in the fixed deposit, pulled out all the money, then invested in the bank stock. Within a month's time, so I'll tell you, it was a story of a Vijaya Bank at the time. So the Vijaya Bank was quoting at about 22 or 23 rupees. The book value was around 40 rupees at that point of time. The dividend yield was 11%. So I paid 1% penalty on while withdrawing my fixed deposit. So pulled out all the money and got my remainder of the interest. So bought the stock. Within a month's time, I got paid with the dividend, which is 11% of my purchase value. In next 4 to 5 years, I sold off the stocks at about 80 or 90 rupees level. Just visible. And it was across available for everyone. Some viewer asked me, what's the guarantee? I said that please get up in the morning and go and see whether the bank is open or not. If the bank is closed, first check the calendar. Is it a bank holiday or the bank is closed for no business? As long as the bank is open and it is not a holiday if it is closed, your money is safe. If you can trust the bank to keep your FD and pay that paltry amount, it just makes absolute sense for you to go and buy the banks. There are many people who followed. There are people who get stuck with fear in such a kind of an environment. One other classic example which I had actually practiced was in around the beginning of the pandemic. When you remember an unusual event which brought the crude oil prices to a negative level. So everybody wanted crude oil and talking about the price, but holding crude oil itself was making you pay out the money because there was no storage facility. So I spoke to many of our clients and we said that it's time to buy the crude oil once it moves up. So we picked up crude oil at $3, $4. And you see what happened in next 3-4 years. At a sector level, we tried hand multiple number of times. See, for example, between 2014 and 2020, banking was a hated word. Banks had all kinds of problems. Nobody wanted to touch the banking. So what we told the client is very simple. Look, banking has about 30% weightage on the Sensex and the Nifties. And this is a sector which will not die. This is a sector which will not die. But you need to be having a patience. Nobody wants it. So we took a call on the contra on the bank sector as a whole, and we made killer amount of money. Similar thing we did with the pharma. Because the pharma sector was going through all the problem for this US FDA norms and kind of a thing. Pharma otherwise is always there on the top, but that is one off time wherein which the pharma sector was down. So we brought it as a contrarian call. We went and sat on those firms, but we told our clients, look, you have to be patient. It can't happen. We bought it at a staggered way, and you could make a lot of money. I was a stockbroker for a while, way back in 2009 or so. I still remember that two incidences where once Hindustan Lever stocks fell drastically down. The reason was that the headline news was that the market share of Hindustan Lever has come down. That's the headline number, and the stock really fell down drastically. But what I noticed was the share of the market in percentage term has come down, but the size of the pie itself has gone up. Right. So what is a positive for the market, for the stock, appeared to be a negative news. So we initiated a call to our clients and said that you buy. And the stock price has fallen down, if I remember well, somewhere closer to 200 rupees. And you see where the Hindustan Lever stocks are today, even assuming that they bought it in 2009, and what the kind of money they would have made by doing this. So there are countless such incidences which come into picture. One negative news, just like what you said, like Mahindra's now, it can make, if somebody is able to get that courage. We always say that, making money is all about three C's. Cash combined with conviction and courage. So one of the C is missing, you can't make money. Probably we can add the fourth call now is contra.
Yeah. And I would say that, cash plus conviction plus courage equals contra, right? That is the equation, I think, that you need to really practice. But Doc, all the examples that you mentioned, it requires courage. It really requires courage and patience to stay the course, right? So, for example, if you invested in Vijaya Bank and for the first month, if you see the stock price corrects 10-20% from your buy price, all of us have a tendency to, take that daily report card and think, am I right? Have I thought this through? Maybe somebody else out there is smarter than I am. Maybe collective wisdom is smarter than me, and therefore it's trying to tell me something. Maybe I should just cut my losses short and, move on. This is not, for me. Classic example was the pandemic also, right? That it's funny that the day the lockdown was announced was the day the markets made the bottom. But panic survived for a long period of time, even after that, right? A lot of people were not willing to bet and come back big until, Nifty started crossing 10, 11,000 and people are like, okay, yeah, we'll figure out a way to deal with the problem. And I remember my brother actually told me a very, very interesting thing. It's a very simple thought in hindsight. He said, look, if we survive this pandemic as a race, you are never going to find better prices on these assets. If we don't survive, what are we going to do with the portfolio? What's the use of that portfolio any which way? So, sometimes just taking that simple view and just sitting tight, but it requires a lot of courage. So hats off to you for, identifying it through, such a long time horizon. You've done it time and again. It's not everybody's cup of tea, I would say.
But there is one great advantage with the contrarian investing. Unlike the momentum investing does not give you time. You have to take decisions with the split of the second, or you have to say, oh, I see a momentum and that's why I have to cash onto it. Contrarian investing gives you ample amount of time to onboard yourself. You can prepare yourself. It gives you months, years time for you to identify the opportunity, garner courage, do your research, find money, mobilize money, and then you can go and latch onto it. Contrarian investing, if somebody can really practice, can create killer amount of money, and it gives you ample time. You don't have to take, let's say that I gave this idea to my client. He doesn't have to take the idea tomorrow morning and bring loads of cash. He can take months together time to invest, find out where the money is, what he can do, and then come and sit on it. That's the biggest advantage of Contra. You don't have to take an emotional decisions at all. No emotion, plenty of time, Nobody is behind it. Nobody knows about it. It's just like, you go into a forest and find a mine of diamonds there. There is nobody to take away it. So you leave it there, cover it with something and come back. Go after 1 year, it's still there. That's how the contrarian thing works. Now, let's say if somebody wants to do the contrarian investing and he doesn't have the stock picking technique or any of these things. Is there an institutional method of investing for on the contrarian side, like for example, a mutual fund portfolio? Are there a dedicated PMS? You run a QPMS. For me, it looks like something slightly advanced form of contrarian investing because you pick up stocks when they come out of the hibernation, but you cash them when they are just on the moving scale. What opportunities are available at an institutional level for some audience to pick to contrarian call?
At a institutional level, I think there's definitely a category of mutual funds that are called contra funds, right? And they're promoted by large AMCs, and they do a very good job of, allocating money in this style of investing. There would be individual AIFs and PMS schemes as well. But I think that if you look at any great investor, right, who's allocating large sums of money over a long period of time, you will see Contra becoming a part of their system. That is the only way to allocate large money. You have to be ahead of the curve because otherwise, if you're in middle of the move, you betting itself is going to take the stock price up, right? And you can't afford to do that because then you lose out on all the returns. For example, there's a very reputed fund house called Parag Parikh Mutual Fund, and you see typically their top positions are generally stocks that are getting made fun of on Twitter. In 2021, I remember they took a very large bet on ITC when everybody was making fun of, everything in the world will move, but ITC will always remain a 200 rupee stock or 150, whatever the price was at that point of time. I mean, if you see their current largest bet, HDFC Bank, another stock that people are, barring the last month or so, people have been making a lot of fun of that company. And remember, during Mr. Puri's time in the bank, it was the most loved bank of the nation and of the investors. You will see large allocators of capital move in this manner. But definitely, there are also contra funds that have been launched by a lot of AMCs that specifically only do this. And then there are some people who inherently do this as their style. So, like you pointed out, the way, especially the way we like to do our work on large caps, we like to be ahead of the curve because that is, in our opinion, the only way to make money in large caps today, right? Because there are so many fund managers, so many analysts running after those 100 stocks. By definition, there are only 100 large caps in India. There will be at least, I think, 10,000, if not more, people tracking those 100 stocks, right? And in an institutional manner. I'm not talking about individual investors right now. So it is very difficult to if you don't take a contrarian call, it is very difficult to make money because the moment there is a bit of good news, 10,000 people have analyzed it, said this is good news, gone ahead, bought the stock, and the entire arbitrage is over. It's vanished. So you have to, in large caps, I believe, be a contrarian investor today. I think with the amount of coverage and the amount of information tsunami that we have, especially on these companies, it's difficult to make money otherwise in a structural manner if you're not a contrarian investor, especially in large cap space because there is so much money and so many people chasing it.
While we know that contrarian investing is very rewarding, is it also having the negative side of it? See, it's not so popular. There is something which is in the contrarian investing which makes it not so popular. What's the negative side of doing a contrarian investing?
I think the biggest negative side of contrarian is your time horizons cannot be fixed in contrarian investing. So if you're somebody who, let's say, has a very definite period of time, let's say you have a objective of use of money that is slated for 2 years down the line, you don't know if in the next 2 years your idea is going to be recognized by the markets or not, right? Like you rightly pointed out, sometimes it's a diamond mine in the forest. You've covered it up and kept it there, and it remains a diamond mine in the forest for a year, 2 years, 3 years. So if you have a defined use of money, that I think is definitely a very big challenge, which I think keeps people shy from taking a bet on things, because most people, the way they plan their finances, they are sometimes ad hoc. A lot of them don't end up working with planners. A lot of people like to do things on their own because there's just so much information available. Everybody believes that WebMD and Google is good enough to become a doctor. Similarly, similar sources are good enough to become wealth manager on their own. So I believe that that creates a very big challenge for people to get themselves organized, say that, hey, this is a bucket that is for 1 to 3 years. This is a bucket that I don't need to touch ever. I don't need this money. This is my spare net worth, my spare wealth. And if people are just able to organize and get that together, then maybe they will be able to, allocate some money to contrarian investing. But without that, it seems difficult to do so.
Let's say somebody accept contrarian investing as a means of an investing or an idea. What is the normal time frame that they have to keep in mind for their ideas to give them the benefits that they are looking for? Is there a time frame you can say, or you just say there's no time frame, it is going to be unlimited? Or is there a step-by-step method on which they have to follow? See, for example, they have identified an opportunity, and because it is contrarian, it is not going to move very quickly. Can they do staggered investing? What kind of the time horizon that they have to keep in mind?
As a rule of thumb, I would say that my personal experience has been that over a 5 year horizon, earnings and stock prices can't be divorced more than 5 years, right? So I think that would be my rule of thumb answer. But having said that, I would, always caution and say that if you were doing contrarian investing, you should do it with that capital on which you don't have a defined time horizon, and that you don't have any use for that capital in a defined time horizon, because sometimes there could be an external circumstance that would come up, right? So maybe the earnings do come through, and some global event occurs, and all of a sudden your returns are not made, or you're just stuck over there. So I would recommend to work with that capital that you don't have a defined use for currently. That should be sort of a capital that you invest with that absolute long-term wealth creation mindset, which can be done through contra investing.
Even from my practicing here, some of the things that I have practiced is that when we pick up the contrarian call, keep a space for it, but don't make it the entire plate out of the contrarian calls. This is number one thing which we follow. Second thing, when we observe the contrarian opportunities, the first thing for me is this company should not die in 10 years from now.
Yeah.
Okay? The survivability of the company becomes very, very important. That's how we picked up the banking. That's how we picked up the pharma. That's how we picked up this oil, these kind of a thing. So it's an essential part of the economy. It will not die. But if it is were to be some technology company and it might die, and the technology goes out of fashion and things can become sour. And the best way is invest in a staggered manner. You are not in a hurry to bring big chunks of money in one day. So you better practice in a staggered way. So put money in small tranches for a period of time. That gives you ample time to onboard yourself. This is the technique that I have followed when I'm doing the contrarian investing.
I was saying absolutely. I think, like I said, the first premise has to be that the company has to be of a good quality, right? Being contrarian for just the heck of it, right, is not the right approach to contrarian. Like, there has to be a certain underlying given understanding on the quality of the company and of the business. And then going contra is definitely a very, very useful add-on. But it cannot be that I will go contra just because I want to go contra. So, that should never be the starting point. The starting point always has to be in investing. That, and as Mr. Buffett says, right, because earlier he used to practice cigar butt investing, and then he realized that once he collaborated with Charlie Munger, that you first need to make sure that the company is of a great caliber, of a good quality, and then buy it when others are very skeptical of it. Buy it when others are very fearful whether they'll make money on it or not. So you're absolutely bang on that.
You are a fund manager yourself. You know the benefits of contra investing. Do you practice this on a day-to-day basis, or you are constrained by the mandate of the fund that you are managing?
No, I definitely do practice it. Like I said, especially in the large cap space. in small and mid, maybe the nature and the size of the companies is such that there are not enough people looking at it. So it becomes easier to buy things as and when the results are coming through. You may not need to be the first person to spot the results because sometimes they're so small that it's just beyond the purview of others. But in large caps, like companies like Mahindra, companies like HDFC Bank, or those kind of companies, it's always going to be well researched. It's always going to be well discussed and talked about. Definitely over there in large cap investing, one has to practice contrarian investing, and that's what we've done. And in fact, it is very surprising to me that our track record as a result has been a little bit better in large caps than it has been on small and mid caps within the same portfolio. So I'll give you an example. We took a bet on Tata Consumer Products back when Mr. Chandra took over as the head of Tata Sons. And all of a sudden, the focus of Tata Group became services, consumer businesses, all your capital light businesses, right? The decade before that, Tata Group was all about owning assets. So you had a lot of M&A happening in steel and auto and all of that. And Mr. Chandra, who comes from the TCS pedigree, sort of changes that around. We took a call that if Tata Group gets serious about their consumer FMCG business, that it's a wonderful asset and they have a lot of potential over here because the Tata brand name is something that every household in India respects and is going to be able to buy into. We bought Divi's Labs when the import alert came in 2017. It's funny, people don't realize the world's largest US FDA approved API facility is in Vishakhapatnam. It's not in the US, it's not in China, but it's in Vishakhapatnam, belonging to Divi's Labs. They're so critical to the global supply chain. No matter what US FDA investigation comes through, you cannot take them out of the equation. So for an impact of 2% on their top line, the stock had gotten hammered by 50%. Great time to buy into the company. We bought Mahindra and Mahindra, as I discussed, in 2020. And then currently we've, about 9 months back, we've bought HDFC Bank in a big way. So when we take bets in large caps, we take concentrated large bets, but they're generally almost always contra in nature. Because I think that's the only way to make great money in large cap stocks. I don't know what your thoughts are on this, but that's how I run my fund.
I'll echo your thoughts, but the fund managers also have to be a little bit lucky when they pick up the contra. I'll tell you the recent examples of what happened. We all know the celebrity fund manager, Prashant Jain, right? So he was running the HDFC funds and he's a great proponent of getting into the PSU sector. Probably he came a little bit too early and sat in the funds. And the fund manager's job is not easy. You are answerable to your company, your sales force, performance of the fund on a day-to-day basis. It's a cruel world. It does not give the fund managers the required time that they really need. And he was coming on the call every time and he used to say, this is the time we have to exercise patience. It will deliver, it will deliver. But it's rather unfortunate. Probably it looks like that he left HDFC funds before the PSUs moved out. But his ideas were bang on target. He was accurate. It was just that the time did not work in his favor. And probably he quit HDFC before they moved out, before the PSU made its uptick, or maybe just in the beginning of that thing. So it's a fund manager is a great person. I was doing an interview with one of the fund managers. He was telling me something which is very interesting, which had never struck me. If your entire portfolio is doing very well, that means you are at a risk point. Some portion of your portfolio has to be always underperforming, which means that in the long run, you will stay in the race. But if your entire portfolio is doing top of the momentum, it's just a matter of time that you will go out of the radar. So see, these fund managers are really, really, very intelligent persons, but the market has to be kind to them. The world around them, the sales, their management, everybody has to be kind to them. Otherwise, it's difficult. Anyway, thank you very much, Harini. We are running out of the time. We can go on and on and on. I'll definitely talk to you more finer points during our next interaction. Thank you very much for your time to come discuss these ideas around contrarian investing, and we could get some good real life examples. We remain in gratitude to you. Thank you very much.
Thank you so much for having me. Thank you.
Dear viewers, hope the discussions we had today gave you an idea how interesting it is to take contrarian investing to make a killer amount of money from your investing activity. If it gave you an idea how you can go about the pitfalls around it, the opportunities that come with it, please do give me a thumbs up. If you are somebody who is yet to subscribe for this channel, please do hit that subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert, with yet another thought next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.